All right, guys, today's video, I feel like I have to play devil's advocate for a bull case. Even though I've projected, you know, the market crashing and all that. What's the argument for this being the bottom of the crash, essentially, or very near the bottom? Think about this, guys, okay? Front page of CNN. If you've seen my videos about the news inversion narrative, I talked about that a lot like 2 years ago, but I still, talk about it from time to time. It's not always the most consistent way to get a play, but sometimes when it's like blaring in your face, the news is telling you one thing. Usually they're trying to short you. They're telling you what to do, and then they're going to take the other side of the trade, right? So here's the argument for a crash being over soon. I see this on the CNN front page, and I'm thinking, okay, hold on. If there is a recession, they wouldn't be trying to tell everyone there's going to be a recession, right? They'd be trying to make people complacent, right? Here's the thing. Everyone thinks that, and I talked about this in a recent video where I said that the tariffs are kind of a distraction in the sense that the news points to that as the reason for the stock selling off when actually it has to do with rate cuts, right? However, I will say this. The whole concept of buy the rumor, sell the news, meaning that the rumor, like when there's rumors of it or when it hasn't happened yet, you bet on the bias that causes, but as soon as the actual policy takes effect, it's been priced in, and then price tends to, market prices will tend to actually reverse at that point. So if you look into it, the tariffs are taking effect April 5th and April 9th, right? I think the more general tariffs, April 5th, and then the more extreme ones, April 9th. Well, guess what? If everyone, all of retail and stuff, people who are trying to piggyback on big institutional trades are saying that once the tariffs go into effect, it's going to cause a market crash. Maybe there is an argument for taking the other side of that, meaning that all this fear created by the tariffs is actually pricing in the tariffs. And then the day that the tariffs go into effect, Wall Street's already ahead of people and they're already priced in, meaning that once those tariffs go into effect, they can't drive the market any lower unless there is a change in the rates of any of the major tariffs, right? Unless Trump changes the rate, it's already priced in once it goes into effect. The day it goes into effect, the moment it goes into effect, it's priced in the market. So that is the bull case, is that if everyone who's trying to outsmart the market but is following the news to do so, shorts after the tariffs go into effect, honestly, they're probably getting rugged by bulls stepping back in. Now, in terms of the broader market outlook, in my opinion, as long as rates are still going to be going down, the market is overall bearish until rates hit a bottom. However, this whole tariff thing, once the tariffs go into effect, it actually could drive prices up in the meantime until the next rate cut occurs. So, I'm no genius and I'm still figuring this out like you guys are. I'm just probably a bit ahead of you guys in my experience. But to me, it seems like, okay, the market's been selling off on rate cuts and on tariffs. As soon as the tariffs go into effect, they're priced in, and the existence of those tariffs is not going to drive price any lower, meaning that some other event would have to occur to cause retail to lose, right? But if retail is expecting tariffs to drive prices lower, then they can't go any lower. Institutions aren't going to allow that to happen. They're going to let retail get short, and then they're going to take the other side of that trade against retail and drive the market back up. So only time will tell, but I'm saying this. If the news is telling everyone to sell on recession fears right as the tariffs are basically about to go in effect, they're going in trading, there's only one more trading day this week. And when stocks open next week, tariffs will already be going into effect. So what I'm saying is, although I am bearish until rate cuts are over, you could see a medium-term bull move in this market again until rates get cut again, because tariffs will have no further reason to drive prices down, because that's the whole thing about the market. It's really about being ahead of the game, right? And so that's why they say buy the rumor, sell the news. Like, once the thing has actually happened, markets will reprice to fair valuation based on that information very quickly. And so that's what people don't understand about the market too, is it really is about pricing it in leading up to the moment the information comes out, probably due to insider trading and stuff. But the moment the information's known and market reprices to the accurate value based on that information, that is now priced in. And that information cannot move the market any further unless there's a change regarding that information, right? So just keep that in mind, guys. Also, there is a big swing low here, so you know there's stop losses here. So like, if there is a bull run for the next few months until a rate cut occurs, or until the market begins pricing in the anticipation of that rate cut, I could see these lows being this low being taken out right here, and then price going for a bull swing for a few months. Just saying. So I know this kind of goes back on what I was saying before, but it's like, this just occurred to me, so I don't want to like act like I'm a genius and know everything, but like this occurred to me and I felt like I needed to share with you guys that, hey, actually there is a case for a medium-term bull market within a larger bear market. Because if you look at like 2022, which was a bear market, there were, month-long, 2-month-long bull swings, right, within that bear market, but price ultimately still went lower. So what I'm saying is, once the tariffs go into effect, you could see a 2-month-long, or I don't know the exact duration, but you could see a bull swing occur for a couple or several months until anticipation of a rate cut starts looming closer again. And you saw last year that the anticipation of the rate cuts actually did crash the market right here. And this is, again, how the market gets tricky, is once the rate cuts occurred, then the market went up again because they were already priced in. If it had been not according to expectation, then the market may have crashed more to try to price accordingly. The 0.25 basis rate cut in December, I don't think was completely expected, and it crashed the market. I mean, I think they were expecting 0.5 or whatever, but once it became known that, they're going to draw out the rate cuts more, then it became more of an extended bear market. At least that's what it seems to be to me. But anyway, guys, just playing devil's advocate here. I'm not saying there will be a bull swing once the tariffs go into effect, but like, if you just pay attention to price action and see, like, what is it doing? Does it look like, and look at the sentiment? Because when it comes to news-driven market moves, you definitely do have to study the sentiment and try to see where all the masses, the sheep, are being herded into the slaughterhouse, right? Because it's a zero-sum game, so their losses become institutional gains, right? Collectively, it's not like necessarily like retail and like, the average middle-class investor, any one of them is a lot of money to be made off of, but collectively, the collective existence of all retail and less informed institutions and people that follow the news too religiously and buy into its lies, all those people collectively constitute a decent amount of wealth to be transferred to institutions, right? If there's millions of dollars to collectively be made off that, you can bet institutions are hunting for that money. Like, they're for profit. They have to scrounge out every penny they can. I mean, it's not pennies, but like, they go for like little wins here and there too. Like, you think that a $1 billion or $1 trillion asset manager is just built off of big plays. No, there's tons of small plays and stuff too. And I guess I'm being a little general about it, but I'm just saying is like every dollar counts to them. If they can make retail and less informed hedge funds and whoever make the wrong play and then take the other side of that, they're going to do it, because they clearly stand to gain enough money that doing that repeatedly over and over again adds up, right? So anyway, guys, I'll end the video here, but just be careful. Like, I've noticed this, and I'm sure some of you have too, that the moment the news actually occurs and goes into effect, the market tends to do the opposite, and that's because it's already priced in, right? You've seen it with like Apple events, Tesla events, or whatever, where like there's a big Apple day or whatever where they unveil some new product, and in building up to that, the stock valuation goes up, and then the moment the product is unveiled, it's basically as was expected, and then all the retail then starts buying once it's unveiled, saying, oh dude, like everyone's gonna be hyped about it, but they actually end up getting rugged by institutions who then start using price manipulation algorithms that will drive price lower because they see all these people buying at that price, and if they get those people to sell it at a loss for like they make price drop 10-15% over the next couple months, and those investors, because they don't know what they're doing, they feel the pain, and then they sell for a loss, and the institution took the other side of the trade, meaning that literally the people who were buying at that high price level were being sold to by the institution who was going short against them. And then when the retail sells for a loss at when they've lost 10-15% on the price, and if it's been options, it's leverage, so they may have lost like over 50% of their portfolio or whatever. When they finally sell their positions back to the institutions, you see, it's a zero-sum game. So like literally the institution was on the other side of their trade both times, and the institution also owns the news company, right, by being a majority shareholder in the news company that promoted that bullish narrative to the retail investor. It's all right there. It's right in front of your face. You see what I'm saying? Like they tell them to buy here and they tell them to sell here, and they're taking the other side of it, and the retail investor's losing. And I use retail as a broad term. It's it doesn't just mean some guy who only has $1,000 who's in his bedroom. It means like a guy who has a 6-figure job but also tries to trade on the side. There's a lot of liquidity and a lot of money to be made off people like that who still don't know what they're doing but think they want to try to outsmart the market. Okay, anyway, I went off on a tangent again. I'm going to end the video for real, guys, but just keep this stuff in mind and wait for signatures of that in price, and be ahead of the game, right? You got to outthink. You got to see, is retail too bearish? If retail and the news media is too bearish, prices are very unlikely to continue falling, right? Because the media wasn't, this wasn't a warning. Well, I mean, they hadn't plunged yet, but this media company, CNN, wasn't warning this up here when it would have been good to know that stocks are about to fall, right? They're warning it down here when stocks have already fallen, over 10%, or different, assets have already fallen over 10%. So now they're telling you, oh no, it's going to fall. It already did fall. So it's like, at least for the short term, understand there may be some, people behind closed doors, behind the black curtains, trying to take your money, right? By influencing your psychology and your bias and which way you think the market's going to go, and then they're going to take the other side of that. And even if you don't fall for it, think how many people do fall for it. Okay, take care, guys. See you next time.